OG John AG here. $15 trillion has been wiped out from gold, silver, and crypto combined. Gold down 15%, silver down 38%. In the last 24 hours alone, 15 trillion plus erased. That's half the GDP of the United States gone in one day. We just witnessed the first Sigma 10 event in financial history. Mathematically, this shouldn't happen in the lifetime of the entire universe. The simulation is literally breaking and it's not stopping. 500 billion has been wiped out from the crypto market over the last 3 days. 2.5 billion worth of leveraged long-sided in the last 24 hours. This makes today the 10th largest liquidation event in crypto history. Bitcoin is down 13%, wiping out nearly 265 billion from its market cap. ETH dumped 25%, erasing 91 billion. XRP fell 22%. So crashed 23%. And for all the new people here, let me be clear, I don't sell signals, mentorship, or courses. The real OGs here know this. Don't come here asking me where to buy or sell. That's not what we do. We dissect. We look at both sides of the picture. This is a space for independent thinkers who use this information alongside their own judgment. If you can't do that, then trading and investing might not be for you. My handle is OG John AG on both YouTube and Twitter. If you're not following there, you're missing real-time context. We discussed that a move to $86 and below was possible, and it happened. The people who've been here know this. Be aware there are fake accounts repackaging my analysis with fake numbers. I am not responsible for that. Verify the handle. Follow the real account because I don't give you one picture here. No fear, no greed. I've never given a signal or taken one side. I give you the unbiased truth, and I've always told you to use your own brain. Know where you stand and operate on your own terms. Now here's what you need to understand. Friday we had the metals crash. Silver down 31%, gold down 13.6%, 7 trillion erased from precious metals alone. I showed you the smoking gun. JP Morgan closed 633 silver short contracts at the exact bottom. They timed it perfectly. They exited. And now this weekend, crypto gets absolutely destroyed. Bitcoin, ETH, everything crashing. Is this coordinated? Is this contagion? Or is this the system breaking down in real time? Let's connect the dots. Friday's 25% silver crash wasn't just about Kevin Wersch or dollar strength. It was more than that. A fundamental driver, yes, but also a plan manipulation using that driver as a catalyst. CME raised margins to 11% on January 28th. Specs who went long at $25,000 margin suddenly had to post $66,000 at $120. Silver forced liquidation. And JP Morgan's February delivery data, showing them issuing 633 contracts at Friday's $78 settlement, suggests large banks covered shorts by buying from forced sellers at the bottom, while physical markets in China and India refused to participate at any price. If JP Morgan covered a large short book during the forced liquidation by buying from over-leveraged specs at $78 to $90, they exited near the lows. Physical holders in China and India refuse to sell at any price. This sets up a dangerous rebound dynamic with far less short interest to cap the next move. That's the metal side. Now, looking at the numbers, about 3 out of 4 of you aren't subscribed. If this raw, unfiltered perspective is actually sharpening your view of the market and helping you build real conviction, then hit subscribe. That's how I know the real community is here and growing. And if you're getting value, drop an OG John AG in the comments. That direct feedback is incredibly valuable. It helps me and the team stay focused on what truly matters to you. If it's not for you, no hard feelings. I don't chase empty numbers. I'm here for the people who want truth, not the polished out-of-ouch stories from the mainstream. Now crypto. Why is crypto crashing today? Bitcoin below 79,000. It's entirely a liquidity situation. There have been 3 well-defined liquidation waves totaling approximately 1.3 billion over the last 12 hours. In a market where liquidity has been choppy at best, sustained levels of extreme leverage are resulting in air pockets in price. Couple this with herd-like sentiment, constantly shifting from extreme bullishness to extreme bearishness, and the swings become even more aggressive. Michael Saylor's strategy is just 1.8% away from going into the red on its Bitcoin holdings. Strategy holds 712,647 Bitcoin worth 55.72 billion acquired at an average price of 76,038. At the 126,000 peak, their holdings were worth 81 billion, even though they had 70,000 fewer Bitcoin. If Bitcoin drops below 74,600, Saylor goes underwater. That's a major psychological level. Let me compare the liquidation events. October 10th crash, 19.1 billion in liquidations. Co-crash 1.2 billion, FTX crash 1.6 billion, today's crash 2.51 billion. This is the 10th largest liquidation in the history of crypto. And it's happening right after the biggest metals crash on record. Connect the dots. Here's the mid-EV video reveal that reframes everything. 15 trillion was flash liquidated from gold, silver, and crypto. The same weekend, the media floods everyone with Epstein files and WW3 threats. So the question is, Where did the 15 trillion actually go? It doesn't just vanish. Someone took it while everyone was distracted. Markets aren't just manipulated, they are rigged. This is war against the people. And speaking of WW3 threats, Trump just said he deployed troops and warships to Iran in case Iran does not want to make a deal with Israel. Qatar's Foreign Minister Mohammed bin Abdulrahman arrived in Thrawn reportedly carrying a final message from the United States to Iran's Supreme Leader Ali Khamenei. This is escalating fast, and markets are pricing in geopolitical risk by selling everything. First U.S. bank of 2026 just went underwater. The first bank failure in over 7 months. This is exactly how 2008 started. Small banks fell first, then the whole system followed. The result? Trillions erased. Millions of families crushed. The system is infinitely more fragile than they admit. Most people are completely unprepared for what's about to hit them. 3 trillion knocked out in a matter of minutes. This isn't just normal market fluctuations, it's a raid. Where is the SEC or CFTC? Markets aren't just manipulated, they are rigged. Some prominent financial analysts have stated that we may witness more banks, hedge funds, and crypto exchanges collapse as market conditions tighten. Only time will tell. Now, let's talk about what Monday could bring. 2 scenarios. Bearish case first. If this is a full-blown liquidity crisis spreading from metals to crypto to equities, Monday could see more carnage. Asian markets open first. If China, Japan, Hong Kong all gap down hard, that sets the tone for European markets, then US markets. The contagion spreads, more crypto liquidations as people wake up to losses and panic sell, more margin calls across all asset classes. If Michael Saylor goes underwater on Bitcoin, that's a headline that triggers more selling. If more banks are rumored to be in trouble after Metropolitan Capital failed, confidence cracks further. The flight to cash accelerates. Everything gets sold. Liquidity dries up even more. Iran tensions could escalate over the weekend. If there's a military incident, a strike, anything that heightens war fears, Monday opens with panic. Oil spikes, markets crash, risk-off dominates. The 15 trillion that got erased could turn into 20 trillion, 30 trillion as the selling cascades. And here's the critical part for precious metals. If this is pure liquidation driven by margin calls and liquidity needs, gold and silver could get hit again Monday, despite being safe havens, just like Friday, just like this weekend. In the initial phase of a crisis, everything sells as people scramble for cash. The safe haven bid comes later in phase 2, but phase 1 can last days, or even weeks in extreme cases. CME could hike margins again on Monday. More forced selling in metals, more liquidations. The paper price could drop further even as physical premiums explode. We're already seeing Shanghai premiums at 43% plus. If COMEX drops more and Shanghai holds or rises, that premium could hit 50%. At some point, the COMEX pricing system loses all credibility, but getting there could be painful for anyone holding paper positions. That's the bearish Monday scenario. Now, the bullish case. If JP Morgan and other large banks successfully covered their short positions at the bottom, there's far less short interest to suppress the next move up. Physical holders in China and India refuse to sell at $78 to $90. They're holding. Delivery demand is still 2514 contracts for February. Physical is tight. If Asian markets stabilize Monday, if the liquidations stop, if margin calls ease, we could see a violent snapback. Shorts are covered, physical is tight. Shanghai premiums at 43% scream that paper is disconnected from reality. The rebound could be fast and brutal as short covering meets physical demand. We've seen this pattern before. Massive flush, then explosive recovery. China's January 1st export controls are crimping supply. India absorbed 25% of global production in 2025 with inelastic demand. The physical fundamentals are rock solid. If the paper liquidation is over, if the weak hands are flushed, the path higher reopens with less resistance. Mining stocks could double over the next 4 to 6 months as the dust settles and the bull market resumes. Crypto could bounce Monday if the liquidations are done. 3 liquidation waves totaling $1.3 billion might have cleaned out the over-leveraged positions. If Bitcoin holds 79,000, if Saylor doesn't go underwater, confidence could stabilize. The herd sentiment shifts back from extreme bearishness to cautious optimism. Liquidity returns, prices recover. Iran tensions could de-escalate if the message Qatar delivered leads to a deal. If there's no military incident over the weekend, if diplomacy prevails, the geopolitical premium comes out of the market. Risk on returns, assets rebound across the board. And here's the kicker. If this was deliberate manipulation, as the data suggests, JP Morgan exiting at the bottom, 15 trillion erased while media distracts with Epstein and WW3, then the manipulators are done. They got what they wanted. Weak hands flushed, shorts covered, positioning reset. Now they let it run. Monday could be green across the board as the next leg of the bull market begins. But here's what I'm watching. Shanghai futures open Sunday night, our time. If Shanghai silver holds firm or rises while COMEX is closed, that tells you physical is not panicking. If Shanghai gaps down hard, follows comps lower, that tells you the selling pressure is global and real. The Asian Open will set the tone for Monday. Bitcoin over the weekend, if it stabilizes at 79,000, holds that level, maybe even bounces to 82, 85, that's bullish for Monday. If it breaks below 75,000 and Sailor goes underwater, that's bearish. The crypto action right now is a leading indicator for Monday's risk appetite. Iran news over the weekend. Any military strikes, incidents, escalations, that's bearish for Monday. Any diplomatic progress, de-escalation, deals, that's bullish. Geopolitical news moves markets, especially when tensions are this high. Bank news. If more banks are rumored to be in trouble, if there are weekend emergency meetings, if FDIC is stepping in anywhere else, that's bearish for Monday. If metropolitan capital was isolated, if no other banks are failing, confidence holds better. So where does this leave us? 3 key takeaways and we're out. Number 1. 15 trillion erased from gold, silver, and crypto combined. First Sigma 10 event in history for metals. 10th largest crypto liquidation ever. This is not normal. This is system-level stress. JP Morgan exited shorts at the bottom Friday. Crypto liquidated all weekend. The question for Monday is, does the liquidation continue or is it over? Watch Shanghai open Sunday night and Bitcoin action through the weekend. Number 2. Physical paper disconnect at extreme levels. Shanghai premiums 43% plus while COMEX crashes. Physical holders in China and India refusing to sell at any price. Delivery demand 2514 contracts. If JP Morgan covered shorts and physical is this tight, the rebound setup is dangerous for remaining shorts. But if liquidations continue Monday, paper could drop more before physical reality asserts itself. Number 3. Multiple catalysts converging. First bank failure in 7 months. Iran tensions with troops deployed. Media distraction with Epstein and WW3. Markets rigged, not just manipulated. Monday could go either way depending on Asian Open, crypto stabilization, Iran news, and bank contagion. Bearish case, more liquidations, margin calls, panic. Bullish case, shorts covered, weak hands flushed, violent snapback begins. The unresolved tension is this. Was Friday and this weekend the final flush before a major bull run, or is this the beginning of a larger systemic crisis? JP Morgan exiting at the bottom suggests manipulation and planned flush. But 15 trillion erased bank failures, Iran tensions, crypto cascading. That looks like something bigger breaking. Monday's open will tell us which scenario is playing out. Do your own due diligence. Understand the risks. If you're over-leveraged in anything right now, metals, crypto, stocks, this environment is a liquidation machine. Margin calls don't care about your thesis. But if you're positioned appropriately, if you understand what's happening, Monday could be either the opportunity of the year or the start of something much worse. Stay sharp. Watch the data. The next 24 hours will tell us everything. Invest with logic, not hype. OG out and about.